Good morning, trading world. I wanted to deliver a brief video this morning since I didn't get a chance to do a weekend update video, and also to let you know I am rushing to put out a ebook on surviving and thriving in volatility soon. I hope to release it at some point this week. Upon doing so, I will be selecting a number of traders who receive the guide to participate in a beta group to test out a Discord membership. I am rushing to get this out because I believe we are close to one of the greatest opportunities in the last 10 years for wealth creation. So, enough about that. The title of this morning's pre-market outlook is the characteristics of a shift in momentum, and I just wanted to briefly illustrate some things on how I see shifts in momentum. We are in the middle of a change in momentum on larger time frames. This means bigger ranges, bigger risk, bigger profits. Some of the things that happen in changes in momentum are a lot of head fakes and what I call walls of worry. Now, a wall of worry is when you see price action continuously hit its head on a wall. It continuously bumps its head against this invisible wall, and it can do it for decent periods of time, like all night, and then fall or pull back from the wall to get a running start to retry and break through. Head fakes are often at these walls of worry, where price action seemingly breaks out above the wall of worry briefly, only to reverse and plummet back below the wall. I used to describe this process as that mean dog on the chain you used to have to walk past in the neighborhood. When that dog sees you, he gets to the edge of where his chain will let him go to, that clear line where the grass stops growing, and he barks and growls trying to get at you. Now, the closer you get, the more and more he tries to get at you, but that chain just won't let him get to you. And eventually he'll back up and try to get a running start, hoping to get closer to you, only to be yanked back by the chain. Now, every day for many days you go through this same routine, walking by this same dog that's always trying to get to you, until one day things are different. He goes to take that pull back or run back to get that running start at you, but this time he gets to the end of that chain where the grass stops growing, and the chain pops, and all of a sudden you're running for your life, or at least until the dog gets tired and gives up on chasing you. Eventually the market is going to do the same thing. Yep, the market is going to eventually do the same thing. It's going to continue to hit its head on the wall, and then at some point go to get some momentum to try to break through, and it may get through briefly, only to reverse. Whichever side of the market has the longer shadows or wicks, like this, wherever you get the longer shadows or wicks, that's the side that you need to be concerned with, where risk of running for distance can be the longest. So be careful and plan accordingly. I just wanted to demonstrate that briefly. The resistance, the support and resistance levels are going to be in the description below, but I just wanted to demonstrate that briefly. And what we need to be looking out for today is this critical area between 57.86 and 57.66. We do have a line of demarcation, which is 57.76, where we're probably going to kind of bounce back and forth in here and eventually break out at some point, only to come back in this range at some point. Now, if we do break out the bottom side of this range, you're looking at 57.42 down to 57.23, 57.23 as the reversal area. And you're looking at the same thing that could happen in the reversal area as well, getting caught up and then eventually taken back off. So I just wanted to illustrate that briefly, since I didn't do a weekend video. Be extremely careful of the chop zone between 57.72 and 57.56. If you can avoid it, please stay out, or don't try to take positions within the area, because you're going to get chewed up. Hope this helps. As always, remember, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. Again, hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.